Welcome back to Dinar Current, your top source for the latest on the Iraqi dinar. Today, diving deep into a question on every investor's mind. Is Iraq gearing up for a new exchange rate? The chatter is getting louder, and in 2025, the signs are becoming too significant to ignore. The Central Bank of Iraq, or CBI, is rolling out strict financial reforms, and everyone is wondering if this is the prelude to a major adjustment of the official exchange rate. So, let's break down the economic signals, the CBI's moves, and what this all could mean for the dinar, Iraq's economy, and investors around the globe. First, let's get a clear picture of Iraq's current system. Since 2003, Iraq has kept a fixed official exchange rate for the dinar against the US dollar. But there's also a parallel, or black market, where the rate is usually a bit higher. The CBI uses dollar auctions to control the money supply and keep things stable. This official rate is crucial for controlling inflation, stabilizing the cost of imports, and maintaining public trust in the currency. But times are changing. Growing economic pressures and international expectations are pushing Iraq to rethink this entire setup. So, what are the key signs that savvy investors are watching right now? First, the parallel market rates. When the demand for dollars on the black market skyrockets, it's a red flag for potential instability. And lately, the gap between the official and parallel rates has been widening, which definitely has traders concerned. Next, look at the CBI's policies on dollar access. The central bank has been getting stricter, tightening the leash on how banks and importers get their hands on dollars. They've suspended non-compliant banks and toughened up the auction rules. This is a classic move for a central bank trying to get a handle on liquidity, often right before they adjust an official rate. Another huge indicator is Iraq's foreign reserves. Thanks to higher oil revenues and international support, these reserves have been growing steadily. Think of it like this: having more cash in the bank gives the CBI the confidence to make a big move like adjusting the exchange rate without risking a full-blown financial crisis. And finally, transparency and financial reforms. The CBI is pushing for major changes, like digitally tracking transactions and conducting thorough banking audits. This isn't just busy work, it's about building a strong, modern foundation for a more flexible monetary policy. And a more flexible policy could absolutely include changing the exchange rate. Now, let's talk about the economic pressures pushing for this change. The first big one is inflation. As the parallel market rate goes up, imported goods get more expensive for everyday Iraqis. Adjusting the official rate could be a way to stabilize prices and ease that inflationary squeeze. Then there's the oil dependency. Iraq's economy lives and dies by its oil exports. When global oil prices swing, it can create major gaps in liquidity. This puts pressure on the CBI to consider rate changes to keep the economy on an even keel. A more realistic exchange rate could also be a magnet for foreign investment. Investors want to see that the dinar's value reflects true market conditions, giving them the confidence to bring their capital into the country. And we can't forget the restrictions on US dollar flows. American regulations aimed at preventing money laundering have had a real impact on the dinar's liquidity. With a limited supply of dollars, the CBI might need to adjust the exchange rate to maintain stability in its own currency. So, if a change is coming, what could it look like? Experts have floated a few potential scenarios. The first is a gradual appreciation. In this scenario, the CBI would slowly increase the dinar's official rate to close the gap with the parallel market. This would be a gentle approach, aimed at boosting investor confidence and shrinking the black market's influence without causing a major shock. The second scenario is a controlled devaluation. If Iraq wants to make its exports more competitive on the global stage, a slight devaluation could be the answer. It would make Iraqi goods cheaper for foreign buyers. The downside: This could trigger short-term inflation and public backlash, so it's a risky move. A third possibility is an adjustment to the dual rate system. The CBI could take a hybrid approach, keeping an official rate for critical government business while allowing banks to trade dollars more freely. This would let the market have more influence, gradually guiding the dinar toward its true value. For those of you tracking this from an investment perspective, what should you be watching for in 2025? Keep a close eye on any announcements from the CBI. Any official statements that use phrases like exchange rate flexibility or market-driven reforms are a huge clue. Pay attention to the dollar auction rules. Any tightening or loosening is often a precursor to a rate adjustment. Also, watch for news on bank compliance audits. When you see banks getting suspended from auctions, it's a strong signal that the CBI is cleaning house in preparation for bigger reforms. The parallel market trends are your real-time sentiment indicator. Is the gap between the official and market rates growing or shrinking? This tells you a lot about what traders are thinking. And finally, keep tabs on those foreign reserve reports. The stronger the reserves, the more firepower the CBI has to manage any exchange rate changes smoothly. So, what are the implications if Iraq does adjust its exchange rate? In the short term, expect some volatility. The official and parallel markets will likely bounce around, and we could see a temporary spike in inflation for imported goods as the market adjusts. Speculation will be rampant among traders and investors. In the medium term, if the CBI handles the transition well, we could see a period of stabilization. Public and investor confidence would likely increase, and that pesky gap between the official and parallel markets could finally start to narrow. Looking at the long term, this could lead to a more realistic, market-driven value for the dinar. It would give Iraq's financial system a massive credibility boost and make it a much more attractive destination for foreign investment. But a word of caution is essential here. While the signs are pointing towards a change, nothing is guaranteed. The CBI has made no official announcement confirming an imminent, drastic revaluation. A sudden, unexpected move could still shock the market and lead to losses. The dinar's true long-term potential isn't just about the exchange rate. It's tied to the success of Iraq's broader economic reforms, stable oil revenues, and the banking sector's ability to clean up its act. To wrap it all up, the signs are becoming clear. Iraq is methodically laying the groundwork for greater exchange rate flexibility. With banking reforms, growing foreign reserves, and tighter dollar regulations, the CBI is building a system that can handle a new reality. For investors, the strategy is to watch the parallel market, monitor CBI policies, and keep a pulse on the macroeconomic indicators. While a lottery-style revaluation overnight is unlikely, a series of gradual, managed adjustments seems increasingly probable in the coming years. A well-executed change could be the key to strengthening the dinar, stabilizing the economy, and unlocking a new chapter of prosperity for Iraq in 2025 and beyond. Thanks for tuning into Dinar Current. If you found this analysis helpful, be sure to like, subscribe, and hit that notification bell so you don't miss our next update. See you next time.